I'm Mark Gagan and you're listening to the Voice of Insurance podcast, produced in association with Advantage Go, enabling an enterprise view of exposure. This week's episode is a real burst of energy. Jason Howard is President of Acrisure International and has the task of looking after everything in the Acrisure Group that is outside the US, Reinsurance and Wholesale. This means that most of the world is effectively his oyster. A group as ambitious and fast-moving as Acrisure needs someone with enormous drive and enthusiasm to deliver on such a universal role. And Jason is the embodiment of that. In this podcast, Jason explains Acrisure's global end-to-end insurance strategy in great detail, from a retail broker anywhere in the world, all the way to Lloyd Syndicates and the capital markets. This makes for an incredibly broad and rich conversation. Naturally, we talk about the role of strategic M&A in building a global network, but we also discuss the market and how a business like Acrisure can differentiate itself by joining up the global value chain and making it work more responsively and more efficiently. We also dissect the less tangible questions of corporate culture and the industry's developing relationship with technology and automated underwriting in general, and AI in particular. The business's explosive growth record speaks for itself, as does Jason. I first met Jason in an underwriter's queue over 30 years ago. I can verify that, if anything, today he has more energy, enthusiasm and positivity than he did back then as a young man. It's infectious. I promise that the next half hour will pass by very quickly, and in it you will learn exactly what makes Acrisure International tick, and a lot more besides. Enjoy the podcast.
Jason, welcome back to the Voice of Insurance.
Thank you very much indeed, Mark. I can't believe you want me back again.
Well, the thing is, the last one was actually during the pandemic, so I'm really glad that we could do this face-to-face.
Exactly. That was a bit of an experiment, I seem to think, during the pandemic. I'm not sure whether you could hear me, I could hear you, whether the sound quality was very good.
It was early in that technological moment. I thought, I can't believe I've just started a podcast, and I had to Google immediately, how do you do podcasts online? And it turns out it wasn't that hard, but...
Yeah, I seem to remember I probably said some fairly contentious things, which you were quite happy about.
Well, anyway, I'll have to put a link to that podcast to see any of your grand predictions, whether they came true or not. Predict that electronic trading is now here to stay, I think, with something.
Exactly. The use of e-signatures is now prevalent.
Everyone was very glad that they got their PPL and their white space sorted out before the pandemic rather than afterwards.
Absolutely. So. And their teams.
Absolutely. I think that's probably what we did it on. Jason, so anybody who doesn't know you, we were just remarking before I hit record that I think I met you over 30 years ago, which is slightly embarrassing, maybe for both of us. It would have been
about 1993 in Derek Stimpson's queue at the Generali.
Yes, which was a legendary thing for any Spanish-speaking reinsurance brokers out there who would have sat in that queue in the slightly not very comfortable, foamy waiting area of
for
Generali.
Many hours.
Yeah, and I wasn't even doing it for myself. That was the thing. I was even less enthusiastic because I was queuing up on behalf of somebody who was in Barcelona, as far as I was concerned. They should have come over and queued up for themselves. But
well, that's one thing, the market has changed. We don't queue like that anymore, although we used to, which was a monumental waste of time.
You were probably at Willis then?
No, you weren't. I wasn't. I was at Wilcox, Johnson Higgins.
There you
so I was J&H, but their reinsurance arm, Wilcox. And I joined there in 91 from business school and ended up doing Latin American treaty reinsurance, where I bumped into you.
Yes. You've always been a broker, haven't you?
Always been a broker, yes, although I've done some underwriting-y things as well, but I've always basically been a broker. So I left J&H to join Willis in 1997, where I ran the Latin American business there, firstly in London and then overall. Had a great time doing that. And then in 2007, took over running all the international business of Willis Re, which was great fun, and added all the specialties to that in 2010. Then had a change and ended up running the FAC business and the wholesale business, or chunks of the wholesale business.
And that was branded as Faber, wasn't it?
That was then branded as Faber, which I had great fun defacing the front of the Willis building and putting a big jigsaw puzzle, which over the course of the week turned into Faber, our new branding, which was great fun. Sadly, I think that rebrand didn't last when I then moved on from that and ended up running some of the underwriting businesses for Willis, mainly Acapella, which was a sort of Lloyd's joint venture with Pembroke, which was a great learning experience and very useful for now.
Yes, I suppose because that did end with the Lloyd's changes, didn't it?
Well, that's right. And actually, so then I left Willis after 20 years to go back and work again with Graham Millwater, who I'd worked for many of those years and had a huge respect for, still work with him now, and went to go and join him at Beach. And that was my first experience at a smaller reinsurance broker, really well thought of mid-sized broking business. Joined up with the Headley guys, Adam and Simon, who are still great friends today. We work together very closely, and plenty of other partners who become good friends today.
And Beach was acquired by Acrisure, so
it was the first international acquisition Acrisure made back in 2018.
So, Acrisure International, tell us all about it.
Well, Acrisure International, again, started when Beach was acquired in 2018. Greg Williams, who's a brilliant man and an utter genius and a visionary guy in the market, and met with us for the first time. I'm not sure he was coming over to the UK to buy a reinsurance broker, but that's what he did end up buying in 2018. And actually what it was, really at that stage, was the understanding that Acrisure controlled a huge amount of the front-end distribution, but once the dollar premium flowed out the back, they weren't capturing any of the value in that chain. And so what we were brought on board to do was to help build backwards from the reinsurance market and fill in the bits in the middle. So wholesales, programs, MGAs, things like that.
So International, it's effectively the holding company for everything that's non-US Acrisure.
Exactly. International is everything that's not US in nature. So US retail, US wholesale, what have you, all sits within the US. Everything outside of that sits in International.
So reinsurance, the wholesale business.
So no, the reinsurance sits separately now. Reinsurance used to sit as part of International, but it's now big enough now. Reinsurance has grown more than 8 times since we sold. And so it's quite big enough to be its own business unit. So that now sits aside. But it's basically all of the retail businesses internationally, our MGAs, our Lloyd's underwriting businesses. So they all sit as part of International.
Okay, and so what does that make your job like, and what strategy do you have to execute?
To have been able to be at ground zero in the building out of an international division of such a large broker is great fun to do, and I've had a huge amount of success, fortunately, in building out the business. And so the first thing we had to do was go and create a bit of a network of companies. So M&A was top of our agenda for the beginning of that process. For the first 3 years, whilst we were owned by Acrisure, I ran the reinsurance business and Graham Millwater was building out International. Then I took over in 2021 from him. I've been building it out ever since. So M&A was at the top of our list. We've been very successful. We bought over 65 companies in that time and grown the business to fairly well representation over the UK and European landscape. We've also started to invest in Latin America. We bought businesses in Brazil and Puerto Rico, and we're looking at many others there. And we'll keep on turning our attention to other areas. But for us, it's not about planting flags. It's about finding really good people to partner with.
So strategically, we should think of you as an international retail operation.
We're an international retail operation that has underwriting businesses, MGAs attached to it, and our Lloyd's businesses. But yes, essentially we're retail, and we're continuing to build out as we look around the world for places to go
and
to
is the
and
actual
invest in.
London Wholesale, is that also part of International as well?
Acrisure London Wholesale is part of Acrisure Re because it was born within that and remains part of that. Again, you can get the idea that there's all these silos around, but actually we work all incredibly closely. I mean, Simon Hedley, who runs Acrisure Re, we speak 3 or 4 times a week. Tom Quire, who runs ALW, we speak regularly and have always a meeting with him after this. We're all very joined up. And I think that's one of the things that most impresses me about Acrisure, despite the fact that it's grown enormously. There's just tremendous communication between everyone that works in those businesses, whether it's top level all the way down.
Forgive me for asking. It's just, I'm sure anyone listening would want to know how it all fits together because it's not always that easy.
No, sure. I mean, it makes
something.
Perfect sense to us. And I'm sure that if we designed it from scratch, we would have done it slightly differently. But you react to opportunities. And we're not saying we have to acquire a company in said territory. We just find good partners that understand what Acrisure is all about, what our business model is all about, and want to partner with us rather than go and partner with somebody else. And they could really turn up anywhere. So when they do, we're very open to conversations.
With 65 acquisitions under your belt, are we getting to a sort of maturation phase where you're starting to really focus less, perhaps? Obviously, at the beginning, of course, you have to be all about M&A because you've got to create that international network. What's the emphasis now? Is it you still on the build-out, or have you built enough to start focusing on the organic side of the business and the integration side of the business?
Yeah, I mean, I think we were very deliberate about not having to integrate businesses too much, because if you look at what we've done in the US was to buy over 900 businesses over a 12-year period, which ended up being 450 different companies. And over the last 18, 24 months in the US, we brought those into one company in 4 regions. Just a huge lift.
Yeah.
I mean, really, really complicated. And internationally, we set out not to do the same thing. So we said we'd only want to have one platform per territory. And then if we're going to acquire in that territory, acquire underneath that platform. So we don't really have an integration issue that we have to deal with. For us, it's more about branding them as Acrisure over the course of this year. And that obviously is quite complex because you've got to, it's not just the renaming of them, but, you know, there's legal entities, there's regulatory challenges, there's IT system integration, et cetera, et cetera. But we don't have the same kind of integration issues that the US have had to grapple with and deal with very successfully.
Everyone's got to end up with an Acrisure email, haven't they? And
that's right, exactly. And that comes with its own set of complexities.
Yes, so it seems that you're keen on almost everywhere.
Yeah, I mean, so UK, that's not an emerging market, but we've done lots of M&A in the UK market. You know, when we first started looking at buying an asset in the UK, we just couldn't find anything that we really wanted to invest in. There were lots of roll-up plays where we saw businesses within there that we hadn't wanted to buy, so why would we buy them for a larger multiple?
Especially when you have to pay a premium on top of the premium.
So where was the point in that? And in the end, we decided to do it ourselves and have been hugely successful. We bought 15 businesses in the UK over the last 3 or 4 years and very happy with the way that portfolio is developing. But we've still got regional gaps. We've still got product gaps. So we are definitely doing M&A in the UK as well. So it's not just developing markets. You're right, Mark. It's kind of wherever we can find the right people to partner with. And if the business dynamics look good. I mean, the one key thing, it's a very simple model that we have at Acrisure. Effectively, we only buy businesses that have got successful track records of growth and profitability. So no fixer-uppers, no turnarounds, no retirement plays. We'll leave others to get involved in that. You can make a lot of money doing that. Of course you can, but it's just not the way we do business. And those people that we do acquire have to be prepared to take some of the consideration that we give them in our stock. So you can drive change through the business much more easily having that kind of profile.
Yeah, of course, no, they totally get it. And they say, well, yes, well, I've got the top 10 carriers that I deal with. They might not even know that currently that I'm part of Acrisure. I'm suddenly part of a huge portfolio of business, and I'm probably going to get a slightly different reception next time I turn up with my Acrisure hat on. Everyone gets that, and I suppose once you can see the benefit of that.
Yeah, well, we go to conferences and sit down with carriers and we say, well, you know, how's our relationship? They go, well, we haven't got very much with Acrisure. So, well, actually, you have. And we take out the list of all of the companies that were not called Acrisure that we owned.
No, certainly. I remember when I first met you when Beach had just been acquired. I think you certainly expounded that philosophy that everyone gets to stay independent and everything else. And obviously that is something that has since changed. But I suppose it wasn't a $5 billion business then. So
it's quite funny. When we met Greg for the first time, our international and reinsurance business now are a similar size to that. And so the business has just grown out of all proportion. It's a huge business right now. So you have to think of things slightly differently. And when you're looking at what the next phase or evolution of the company is, you can't think about how you were thinking 5 years ago. And people get it, right? People are not stupid.
It's such a competitive environment for broker M&A. And if you are the sort of broker that you are seeking, I'm sure that there are others out there looking to do the same thing, to buy those brokers. And so if you're a broker which has got a strong track record of growth, compounded year after year, very successful business, and you're looking to sell, you've got a lot of potential partners out there. We all know who they are. What's your kind of pitch to them in terms of on the cultural side of why you should be entertaining an offer from you and not from somebody else? Because I presume you've got to really differentiate yourselves.
Yeah, but it's like anything. It's like any form of broking. You've got to differentiate. You've got to have something that sets you apart. And I think that the actual model that I've explained before is one of those things. Because, I mean, we're not a huge, large quoted company beginning with sort of A or M. And as a result of that, we're not going to come in and crunch you and just turn you into cannon fodder and you pay lots of money, but you don't really care what happens to your company, happens to your people, happens to your clients. So we're not that. We're not PE. So we're not in there to come and invest over a relatively short period of time and then flip or get out or consolidate you and you don't know where you're going to end up at the end of the day. So we're a business that buys companies and those companies become partners and they have a say in how their business is run. So when we buy a business internationally, we don't come and change everything about that company. We've bought that business because they've got good entrepreneurs, very successful, understand how their respective markets work. And partnering with us, we can bring them capital, do more M&A. It can bring them access to products, access to markets, things they wouldn't otherwise have. But we're not fundamentally changing the way their business runs or merging them into a larger organization. So I think maybe there's others that look like us when it comes to it, but certainly not at scale and size that we have. And so we really do think that our model differentiates us. And frankly, after probably around about 1,000 M&A transactions in the last 12 years, that stands out. And usually after a good conversation with the right kind of partner, we don't end up going into a process. It tends to be a conversation before anything like that happens. There's a meeting of minds. Yeah, of course, we have to work out all the financials and legals and all that stuff. But generally speaking, we will know both sides of the table whether we're going to do a deal pretty quickly.
On the reinsurance side, I know that's not in your purview anymore, obviously, but given your background, I think we've always had a very competitive environment in reinsurance broking. And then it got very competitive, and now it's got even more competitive. What are the prospects for that? Obviously, the saving grace of reinsurance broking is it's always been a very high margin business. Probably from an outsider, it would seem that with this much competition, it's going to have to become a slightly lower margin business for a start.
I'm not sure I necessarily agree with that, but then I would say that, wouldn't I? I think the reinsurance market, the broking market being competitive is a very good thing. It's a very good thing for clients, and it's a good thing for the brokers because effectively it forces you to innovate. having a big duopoly isn't good for clients and it's not good for the market. It might be good for the two involved, but it isn't good for everybody else. And actually what you see now is, as I said before, we've grown Acrisure Re 8 times in the last 7 years. We haven't done that by standing still. We've done that through innovating and through offering services to clients that they're not otherwise getting, and generally having to think a bit harder to get in. We can't just sit there and expect to be invited to every tender, to every pitch. We have to work a bit harder, have to think a bit more creatively. But I think key to all of this is talent, because if you don't have the right talent, you're not going to win anything. And I think what we're most proud about at Acrisure Re is how we've developed our talent. So, for example, when we sold Beach, we had 14 partners at Beach, and all but one of those is still there 7 years later. And the one that's not there retired last year after a long and storied career, age sort of 64 or what have you, and still remains a good friend of ours and comes to see us on a regular basis. So that retention of that key management team is pretty unparalleled when you sell a business. Usually people disappear off or go something else or whatever. They've all stayed and we've added to the bench. So I think our ability to hold on to our top talent has been excellent. And also nurturing and bringing talent in. Look at our graduate program, which we're very proud of. We started that 10 years ago. And the first 2 graduates that came into that program in London, the first one, Amy Potton, now runs all of our reinsurance wholesale broking into the London market for Acrisure Re. And the other one is Andrew Ross, who now runs our global markets for the Acrisure Group. So 2 tremendously successful people that come all the way through the system. As long as we keep on bringing good people in and nurturing that talent and they're retaining it at the top level, we will continue to win. It's all about talent. So yeah, it's competitive. It's always been competitive. It always will be.
I've got some children graduating, so I'll send them your way, Jason.
We're very happy to see top talent, Mark.
When I first discussed with you, when you'd first joined the Acrisure Group and you started to really get your head around it, we had a conversation around this connectedness, that understanding of we need that wholesale, we need the reinsurance. We've got this fantastic, particularly US retail network, but now you're building a big international retail network. That those things have to be all connected together, that the idea of perhaps trying to manufacture product via reinsurance and wholesale and then distribute it via your own retail network to try and manufacture a differentiated product was something that I hadn't really heard of a broking organization think that way before. Now that's a maturing strategy. What's your assessment of how it's gone? Have you got any sort of success stories you can point to and say, great, we did that. We set out to do that and we've got an edge?
Yeah, I think probably there's lots of cases where we've put programs in place or products in place. And just recently, as you know, the California homeowners market's very disrupted right now. And we've got a big portfolio of business there. So we've been working together with capital providers and we've formed an MGA to go and offer capacity where there just isn't capacity right now. And very smart, good technology in terms of understanding what the fire risk is, what have you. And so that's just one example of all the way through the chain. We've used our retail brokers, we've used our wholesale brokers, we've used Acrisure Re, we've used the capital markets guys. And, we've got Flux as the opportunity to underwrite that business as well. So that's how we deliver the whole chain to a client that's distressed on the front end. But I think it's interesting. I think we have developed Acrisure on the retail side. On the wholesale side, we've built out London. We got John Sutton and Simon Haggis on board pretty much as soon as we did the deal with Acrisure. That's now turned into a really successful wholesale business. We've developed our wholesale businesses in the US out enormously. We've got loads of programs, loads of MGAs, much more than we ever had. We've acquired a lot. We've built a lot. We've opened a wholesale business in Bermuda under pool scope. So, we've really developed the wholesale piece. When we sold our business on the actual resale Beach as it was a well thought of casualty broker with a bit of retro expertise. It now does everything from critical cat. It's got capital markets capabilities. It's got FAC in there. It's got marine. We've now built out all the capabilities of Acrisure Re.
We've already mentioned about having those carriers, Volante, Flux, etc. Run us through that. It is a feature of your career. That's something you've always been really keen on, of that connecting broking to the underwriting and distribution.
And doing it in the right way. I think it's critical. And I have to say, hats off to Lloyd's, because when we were thinking of how we could build more underwriting capabilities to put our business through, we could have taken it to a number of different places, but Lloyd's were very proactive in helping us think that through.
And certainly that wouldn't have been the case 25 years ago.
Particularly Patrick Tiernan, he was absolutely fantastic in helping us think it through, and several other executives at Lloyd's. And as a result of that, we came up with Flux and started Flux. And really at the same time, we ended up acquiring Volante. So we ended up with 2 syndicates. And they're a really excellent way for us to be more integrated in the chain and to have more touch points with the marketplace in general. If you look at the 2 businesses, they're trying to achieve the same thing, which is to bring business into the London market, the Lloyd's market that's not been there before. If you look at Volante, it was very much a geographic play to go and put offices around the world and access business that wasn't coming to London to bring it into the London market. It's a bit more of an international play than a US play, but it does do some stuff in the US too. So that was its kind of raison d'etre, continues to be. Flux, by a similar token, was to bring in business that was not coming into London, but it was more Acrisure-related business. So as you know, Acrisure is probably the largest SME broker in the US. Very little of that business was coming into the London market, into Lloyd's, because it was hugely profitable and the carriers in the US basically wanted to hang on to it, didn't want to reinsure it. And so we figured that we could bring some of that into Lloyd's. It would be a good thing for the Lloyd's market, good thing for the loss ratio of the market, good for the combined ratio. We thought we could do it much more cheaply than had been done before, because if we had the whole chain under our control, we'd be able to bring the expense ratio down, which is what's happened in Flux. So both syndicates are bringing in business that wouldn't otherwise be there, and I think benefiting the Lloyd's market as a result of that. And it's strategic to us because, again, it completes our value chain where we're trying to be engaged in as much of the value chain as we can be. And that's one bit where I think we were always wanting to have somewhere to guide our business to, a very clear understanding of what our role in that is and having a real separation of duties between people running the underwriting business, people running the broking business. I think, we've done that very well. So it's important to understand that. But I think just boosting the market, we're having more quality business coming in here that hasn't been here before, where this can be a natural home, was just something we really wanted to do.
Once it's in, then of course, yes, it can be reinsured, and it can be reinsured here close.
It can be reinsured. There can be consortia put behind it. You can bring alternative sources of capital behind it. Lloyd's very flexible on that. The key thing is that the people we partner with to bring that business in, because we don't lead any of the business when it comes to Flux, it's all led by somebody else. So the people that we're partnering with have to be first-class underwriters, so that we can be sure that the quality of underwriting on that book is good when it comes into Lloyd's.
Bring it in, you're breaking it into that leader, and Flux is going to follow.
Yeah.
In terms of the modernisation of the syndicated market, particularly the follow form, and now the broker portfolio follow form, every broker in the top 10, if it doesn't already have some kind of facility portfolio, cross-class, particularly London facility, if it doesn't have one right now, it's going to have one. It's got a plan to have one next year or as soon as humanly possible. And at the same time, we've got a new class of underwriter that is a follow low-fee tracker type underwriter, however you want to describe it.
Can't imagine capital is going to give the ability for people just to blindly follow stuff as the market trundles on down. So I think there's going to be a lot more oversight in that. I think on the broker side, yes, there's a lot of facilitization. I think there's a certain limit perhaps as to how much of that per slip is allowable. I think the regulator is sort of going around about 30% as being something that's an acceptable margin for the broker facility to occupy the slip.
If you add the two together, you might get to 50 or something.
I think as the following grows and the smart follow grows, could be potentially even a little bit more than that. At the end of the day, what you need, however, still is leaders. Somebody has to be there to price the business.
You're a broker, you need alternative leaders as well.
Exactly. We can't completely subsume the market into facilities. Then who's going to stand and make the price?
Yeah.
So you've got to support all different parts of the marketplace. And I think the leaders need to be paid to be leaders and to actually, rather than a blind follow that's low cost but isn't really delivering anything apart from
do you think that model, the model of, we floated an idea about leaders' fees, but it certainly got shot down pretty quickly, I think. But the alternative way of doing that is a verticalized model, which you see in some markets, probably aviation.
The aviation market is one.
Yeah, where you have the leader gets leader's price and everyone else has to bid in at leader minus
I think it's more about if there's a bunch of leaders that are taking the time to invest in their business to understand the risk and to understand how to write it properly, and they go out and lead a bit of business, they should then be given that percentage they've asked for. They shouldn't be signed down at the expense of a follow market.
And of course, they've got the claims department. And
exactly.
They've got everything.
So they've got costs on top. So I think, when they say this is the price I want, this is the share I want, that's largely what they should be getting. And then what's left for follow market will be able to pick up. I think that's probably where I would look to reward the leaders. I do think it's important to maintain a healthy market in terms of number of participants. But at the same time, we don't want to go back down the road again where you've got literally tens of leaders out there who don't really know what they're talking about, but they've all diversified into lots of different classes, and that causes chaos as well.
They're world experts at knocking 10% off the price.
Exactly.
So you get to zero quite quickly, as we've all been there. It sounds like you're optimistic that it's a healthy thing, it's going to make the market more productive.
I think it's efficient. I think slips have to be filled out, so that's fine, but it's a balance at the end of the day.
In terms of the dynamics, you think obviously it will improve London's standing and its ability to grow without having to grow headcount and grow expense?
It's an expensive place to employ people. I mean, I think, again, it's this sort of conversation that is there about AI and automation generally, is that how do you maximize efficiency but still keep enough people in the market to be trained up? If you're getting into the law right now, you can't just go and do what most legal clerks used to do and read through lots and lots of documentation, because that's been done by a machine. So how do you train people into a marketplace? It's the same for insurance. How do you get people to really understand what's going on in a particular class of business if they haven't got time to go and broke business or to underwrite business because it's been done by a machine? So you've got to get that balance right of having enough human interaction so that people can actually learn the trade and create a marketplace that needs humans more than it needs machines. I mean, one will support the other for sure.
That sounds like a management challenge. I'm glad it's your challenge, not mine.
But I think it's a challenge in most industries, by the way. And the more potentially automated that industry, the more of a challenge it's going to be. Look at medicine, for example.
It's interesting. What do you think long term? At the moment, for example, you talk about AI, it's the productivity gain type. We're looking at the use cases for AI as being, well, it'll do all the boring stuff for you, and then that'll free you up to do more of the client-facing stuff or more of the market-facing stuff or the more complicated stuff, the higher added value stuff. How long before it's starting to do some of that stuff itself as well, in terms of some of that higher added value stuff actually being automated?
That's a rabbit hole we can dive down. The answer is we simply don't know. But I think if you look at areas where we're using technology much more vigorously than before, certainly on client prospecting. So we're using a lot of technology. You remember we made an acquisition of Tolco just before COVID, and that was there essentially to help us build our AI capabilities. And we've built a very sophisticated front-end tool called Auris, which goes out and finds clients. So say, for example, I've got a client that is a restaurant chain in the Midwest. It's got 10 locations. It's got a certain financial structure, what have you. And because of my client, I know what that client is buying in terms of coverages. It'll go out and find 10, 20 clients that look exactly the same, and then feed that back to me as a producer and tell me what I need to be looking out for, what their issues are, what have you. That use of technology is really helpful because it cuts through all the rubbish that you would otherwise have to go through, hitting dead ends and doing cold call prospecting. It's providing you with a very hot prospect list straight off the bat. So I think use of it in client prospecting is really helpful, but the client advocate's still got to go in there and have the conversation with the client. I still don't think we're at the stage where a computer voice pitching to that client over the phone is going to do it, right? So I think you still need to have that human interaction. I think after that, when it comes to the processing of that business, once you've won it, again, a lot of that will be done automatically, and giving time for the producer to spend time developing those client relationships. That's all fine and healthy. And I think that's kind of where we've invested so based on prospecting and then also automation of the processing behind. And I think that's just going to continue. But until you get to the point where you cannot tell the difference between, is that really Mark Gagan calling on the phone, or is it a computer called Mark that's actually even smarter than Mark? Hard to believe, I know, but I don't think we'll see that in my lifetime as a worker in this business, though.
So this moment, it's mostly productivity gains, but some of these are quite smart.
It's productivity gains, but it's quite clever. And I think prospecting is a huge part of what we do. And it's not just prospecting existing things, it's creating demand for more insurance products as well. So I think, really deal with that insurance gap is going to be something that's going to be really helpful for.
When you're prospecting, to have a really smart view on what limit they should be buying, and also not just comparing, saying, well, actually, I've got two clients that are the same.
Because you get third-party data of what's happening in the market, and then you get first-party data, which you control as well. You blend those together, and you can actually have a very, very good view of what a client's real risk is and how you can help them deal with it. Then when you go into a conversation with them, they start sharing more information with you. You should have a really, really accurate picture of the risk that client is facing.
What about the market itself? It's getting more competitive in most classes, most territories, almost everywhere. How's that affecting your job? Is it making things harder?
Look at the segments that we're in as a business. So Acrisure is, as I said, a large SME and personal lines broker.
That's more stable.
Okay, and that's a much more stable portfolio. For us, it's much more about driving growth in the overall penetration of the market in most of the areas we're dealing with. So we worry a little less about pricing and competition in those segments. But clearly, Acrisure involved in reinsurance, where it's quite different, and there's challenges all over the place. But actually, as well, there's certain segments which are still challenged from a performance perspective. US casualties, no one's slicing prices up there. So, you got to depend where you're looking. But look, Mark, we've been around the market for over 30 years. I don't remember a time when it wasn't competitive one shape size. You're either competing for capacity, you're competing for differentiation, you're competing with somebody for clients, and that's always going to be the way. We don't plan on an annual basis alone. We plan on a multi-annual basis. So I can't be thinking, what am I going to do for next year in terms of resourcing and stuff. I've got to think about that years in ahead. So, you've got to be planning over multiple years to really understand how you're going to drive a business forward over a period of time. The cycle is what the cycle is, and competition is what it is.
Jason, any parting shot about Acrisure International?
The one thing I would say is that if you're an entrepreneur sitting out there somewhere around the world and you're looking for a partner that you want to develop your business with, who'll come and provide you with capital and tools to grow your business and an understanding of the seat you're sitting in, because he's sat in as well, pick up the phone, give me a call.
Well, you can't say fairer than that. That's a good pitch. Thanks, Jason.
Ask a broker and he's going to pitch.
Thanks a lot.
Thanks, Mark. It's been a pleasure.
Well, I hope you enjoyed today's episode. If you did, don't forget to subscribe or leave a like or a review or recommendation on whatever podcast platform you used to access this program. These really help get the word out. Before we go, just a quick reminder that advertising slots are available here and in other places in the Voice of Insurance podcasts. Podcasting is the fastest growing medium and attracts a high quality audience of key decision makers. It's also an intimate medium where you, the listener, are right in the room with me and the interview subjects. Needless to say, that means it's a great way of getting your message out directly to an audience because you know you've got their full attention. It's also very cost effective. So get in touch with Mark at thevoiceofinsurance.com to find out how you could be speaking directly to the industry. The Voice of Insurance podcast is produced in association with Advantage Go, enabling enterprise-scale underwriting through a single pane of glass. Voice of Insurance is produced by me, Mark Gagan. Music was written by Anna Gagan and produced by Carlos Gagan. Check out more podcasts and written comment pieces at www.thevoiceofinsurance.com.